Hi, everybody. Thank you for joining me today. I am Sarah Bumgardner, Member Benefits Coordinator here at AAFMAA, the American Armed Forces Mutual Aid Association. And today we are going to be talking about life insurance. We're going to be talking about understanding term versus whole life insurance. This is a really important topic, right? So today I'm very excited. I have a great guest here with me. And before I get started, I always want to know where everyone is joining me from. So I love to see what part of the world people are coming together to educate and to learn something new. So where are you joining in today? I'm coming in from Nashville, Tennessee. And I also like to know your background, right? What service are you representing today? So I was a Marine Corps spouse for 11 years. So I guess I'll be representing that. But feel free to drop those in the comments. I always love to see who's here with me today. From Annapolis. All right, we got somebody here from Maryland and Virginia. This is great. Well, welcome everybody. So I'm going to pose a question because I have said we're here to talk about life insurance. So before we get started, I want everyone to think, do you have enough life insurance, right? So just think about that question. That's what we're here to talk about. More importantly, though, does your significant other have enough life insurance? Should something happen to you or your spouse, what goes on? Is there enough, right? So that's what we're going to be talking about today. And today I have a great guest with us. His name is Cliff Brown. He is the Vice President of Insurance Operations at AAFMAA. So Cliff, how are you today?
I'm great, Sarah. I'm coming to you from Reston, Virginia. That's where I'm located.
Awesome. That's great. Well, thank you for being here today. And thank you for walking us through understanding term versus whole life insurance. This is a really important topic. Before we dive in, could you just let everyone know a little bit about yourself, right? How did you get into life insurance and what brought you to AAFMAA?
Yeah, you bet. Getting into life insurance, I kind of fell into it. I got out of college, graduated from college, and I was looking for a first job, and I was thinking of going actually into law enforcement, looking at federal law enforcement, and that takes some time. And I joined a company called USLICO, United Services Life Insurance Company, who also supported the military, and I worked in their worksite marketing division, focusing on administration. Opportunities just opened up for me. It was an exciting team there. I liked what we did. So I kind of stuck with them for many years. And it's interesting because my father, who was a retired colonel and AAFMAA member, always told me during those years, you need to check out AAFMAA. They're a really good insurance company. And, if something ever happens to me, this is, just give them a call and they'll take care of you. Eventually, ING, USLICO, merged with ING. They moved out of state. I decided not to go, and I found my home at AAFMAA. And that was 18 years ago.
Wow.
And I love that our paths aligned. And I have the honor to get to work and support our fantastic AAFMAA team that provides AAFMAA's superlative service to our members. So my teams pick up where sales leaves off, the application process, the underwriting, and then once the policy is issued, they're forever home in policy administration. Our policy services reps take care of all members. And I just wanted to bring that out because clearly I'm not sales oriented. I'm admin oriented. So my comments in this discussion come from that administration perspective.
That's great. And that's what we're here to do, right? We're here to educate. We're here to make sure that we're getting the right information out there so that people can make an informed decision. especially when it comes to life insurance, something that's very important. But all too often, we don't want to talk about that, right? We don't want to think about what happens when we're not here. But it's a very important thing to think about. So when we get started here, I want everybody to know if you have questions, please drop those in the comment box. I will be monitoring those and I will get those over to Cliff. So let me know, any questions that you might have. And I guess we're going to jump right in. Are you ready?
I'm ready.
Okay. So first things first, can you talk a little about why life insurance is such an important product and why it is crucial to have enough coverage?
Sure. On AAFMAA's Learning Hub, I found a sentence that really resonated with me, that on a scale of some of the most important things in life, people often rank their family at the top. Life insurance is for your survivors to make sure they're adequately protected and secure. So the reasons for life insurance, number one, is to replace income. The current value of your wages over the remainder of your working life. And earlier, Sarah, you mentioned spouses. A lot of times I see wage earners come through with an insurance contract, but they don't insure the spouse. And, sometimes you hear, well, they're a home worker, they stay at home. Well, very important to insure them as well, because what they're doing at home has a value to it. And if something happened to that stay-at-home spouse, then there's certainly an expense that is going to come from, day camps, childcare, things like that. So yeah, number one, life insurance is to replace income. It's also used to pay off debts, make a charitable contribution, leave a legacy to a family member, or pay for your final expenses, such as burial and any kind of final expenses that you have.
That's good.
Oh, sorry, go ahead.
No, I was going to say that's all wonderful information. I'm so glad you had that listed out in such a nice way for us to see that.
Yeah, and the thing to think about too is there's lots of different types of insurance, right? Your home, your auto, your health, disability, property, valuable items insurance. They're now coming up with pet insurance. And really the reason for insurance is to try to protect and offset those big expenses. Now, of course, home, auto, those are also legally required in some states. But, health insurance, you look at that. Why do people have health insurance? It's because they don't want that. What if something happens to them? They don't want that catastrophic expense to affect them. If something happens to a wage earner or even that non-wage earner, that's a catastrophic expense. So really life insurance, you can call it life insurance, but it's also future income insurance. And it's really valuable to make sure definitely your family is worth investing. And it's cheap to do so with term insurance. So to sum it all up, I think insurance creates a financial security, and that really creates a peace of mind.
Right. That's so wonderful. And I love how you've laid this out and made it easy to understand. Sometimes people get intimidated by thinking about life insurance because it can be overwhelming or you think it's complicated. And so starting with an understanding of why you need the life insurance is a great place to start. And then starting to educate yourself as to what type of insurance you might need. So when we're talking about life insurance, and we've now said, okay, maybe when I posed that question earlier, do you have enough life insurance or do you even have life insurance? Somebody says, oof, I don't know if I do. So when should somebody buy life insurance?
That's an easy answer. I think if you don't have it now, life insurance, a lot of times you get it through your work, and that's some, automatic, some group protection, and that's great. But if you have to apply for it individually, life insurance is cheaper the younger you are, generally. And when you're younger, you're generally healthier, so that makes the process a little bit easier. And also, when you're purchasing during your high earning years, this allows you to get the most insurance for the cheapest amount of price.
Okay. Those are all great things to know. So it sounds like you should do it now, right? If you haven't, and then also reassess to see if you have enough as life is going on. But now our service members and our veterans, they might think that they don't need to worry about life insurance because they have SGLI, right? They have that service members group life insurance. Or when they transitioned from the service, they converted that to VGLI, Veterans Group Life Insurance. Is this an accurate assumption?
That's enough insurance?
Yes.
Well, listen, first, SGLI is great. It's affordable. It's easy to enroll, right? Because it's automatic. You don't have to enroll for it. Being in the service, they make it easy for you. So it's good insurance that obviously every service member will take, but you have the opportunity to opt out of it. I don't know why anybody would, but SGLI is not forever. And because it's not forever, I think there are some times where you may want to supplement it with an individual insurance policy. As you said, it ends 120 days after retirement, so you can't take it with you. And you want to make sure you don't have a break in coverage. The military, you're right, allows you to convert automatically to VGLI. And I have to say, VGLI has some really great rates. The rates are up here now, $28 starting, $64 for age 40 to $64. For the first 10 years, VGLI is very affordable and it's good insurance. And you should always take it so you don't have a break in coverage, but you want to be a smart consumer. It starts to really increase in premium. And the reason they have to do that is because it's guaranteed coverage. Everybody is accepted for that. So they have to cover their costs because sometimes people that are uninsurable for a private policy will have to take VGLI. So is it enough? Is $400,000 enough? If you have no debt, you're a single person, you don't have any kind of mortgage or anything like that, $400,000 may be enough. But if you're married and you have a family that, your children may go to college, you have a house, you may have a debt. I mean, you bought a new car. You want to make sure that your $400,000 is enough and perhaps supplement it with an insurance policy that will continue after your service.
Yeah.
AAFMAA has, plans. Again, I'm not from sales, but I see what people do. AAFMAA has plans that can supplement SGLI and definitely provide better rates than VGLI. And I think we have a chart here to show you this.
Yeah.
Let's go to the next chart. If you look in the leftmost column, you can see the VGLI rate starting for a 50-year-old. Assumption is a $400,000 term policy. Across, next to that on the right, and across going all the way over to the right, are some level term 2 premium rates that AAFMAA offers. And your premium rates are dependent upon your health. Mm-hmm. So most people can get a select or standard premium with AAFMAA. And I did a little exercise and I took a age 50 year old person and VGLI rates. You notice that for the first 5 years, it starts at $132, goes to $240, then $396, then $588. If you look at AAFMAA standard premium, it remains $214 for all those years. It never goes up. Mm-hmm. The difference over 20 years is $30,000. Wow. VGLI would be $81,360, and AAFMAA comes in at $51,360. So that's $30,000 worth of savings. And that's why you want to shop around SGLI. Take it to make sure there's no break in coverage, but then definitely shop around for a more affordable rate.
Yeah. Wow. That is, that's significant, right? $30,000 is a significant amount of money. And you kind of hit on a couple of really great points here about, having the SGLI, making sure you're not having a break in coverage. But most importantly, we need to educate ourselves. We need to look at our exact family situation and see exactly what's right for us. And the best way to do that is to ask questions, right? Is to call, to ask questions, to start learning about life insurance. One of the big things when we talk about life insurance, and sometimes it can be hard to understand, is the difference between term life insurance and whole life insurance. So could you walk us through that?
Yeah, absolutely. First, let's cover how they are the same. They're both life insurance policies, right? They provide a benefit upon the insured's death. They both allow the owner of a policy to name a beneficiary or change a beneficiary or control any changes to the policy over the lifetime. If the policy has any features like conversion rights, the owner is who takes care of that. So they're same in the fact that they're both insure you, and they're both the same in the fact that the owner controls everything with the policy. A term policy is just that. It covers a certain term. So somebody may take out a 10-year term or a 20-year term, and you pay premiums for that term. And at the end of the term, if something doesn't happen, then that's it. The policy's up. There's no refund in premium. And, sometimes we get our policy services team will say, wow, I paid all that money and I didn't get anything. Well, you got the protection of your future income. And, you can kind of equate that to a car insurance. That's a 6-month term. Most car insurance policies are 6 months terms. They renew every 6 months or a year. And at the end of that term, if you didn't have an accident, you get a refund of your car insurance premiums. No, that premium went to cover you from any kind of loss on your car. So a term policy is over a certain amount of term. A whole life policy covers you until the death occurs. So that can cover you for your entire life. People often ask then, well, you mean I have to pay for my entire life? No, you don't have to. Whole life policies allow you to pay the whole life, and that's going to be a lower premium, or you can pay it off early in 7 years, 10 years, 20 years. And, that's a good way to help forecast your money that, if you're 40 years old, maybe you want to pay that off before you retire. So get it paid off, by the time you're 60, or do a 25-year term and go to, 65. The cost, term policy is low. It's for a certain amount of benefit for a certain amount of time. So the premium is low, and whole life is higher premiums. It's building cash value. And, it's definitely going to pay a death benefit where a term life policy may never pay a death benefit. Death benefits, AAFMAA right now, term policies, we do $50,000 to $800,000, and then many go up to $1 million. Whole life policies can also go up to $1 million with whole life. But generally, what I see is people keep whole life benefit lower than term. So term policies are best for covering debt that you're going to pay off over time and won't have after some amount of time, like mortgage debt, lost income, childcare, educational expenses as listed here. And whole life insurance is there for forever, and it will take care of your final expenses at your death. Some people are starting to look at our whole life policy for long-term care settlement option. So instead of buying a long-term care plan, which is very expensive and premiums keep going up on that, they buy a whole life insurance policy for the long-term care settlement option. So term, usually used for maximum coverage, cheapest premium. Whole life is to cover you for forever and cover some of your final expenses.
That's great. Well, I definitely feel more educated in that, and I hope that everybody else does as well. And we had a great comment here that somebody had said that they have both term and whole life, so they can work together, to fit your family's needs. When we think about, term and whole life, are there any pros and cons of both options? Could you kind of walk us through what that would look like?
Yeah, I would say that there's a lot of thoughts regarding this. Some say term is, the cheapest, and you should only put your money in that and invest, the rest. Others say whole life, do whole life only, term, won't pay out. I like it's to me, it's not an either or. I love what the comment was. I think the best option is both, to take out a term policy to have the maximum benefit possible, but also have that protection of a whole life policy for the entire life. I personally have done that for myself and my wife and two children, bought a larger term policy and a smaller whole life policy. And then you get the best of both worlds.
Yeah.
The other thing that you should really look at when purchasing a policy is it's not just about the policy. It's about some of the benefits that the policy may have. For example, in a term policy, at the end of the term, some term policies may give you conversion options. So you can continue insurance in case something has happened, to you medically and you can't medically qualify. For example, our level term one policy at AAFMAA goes up to age 50. Mm-hmm. At age 48, it allows you to convert the level term policy benefit to a 5-year renewable term. That's still much cheaper than VGLI, even in that conversion policy. Mm-hmm. Or at any time during the level term one policy, it allows you to convert to a value-added whole life policy. And both of those conversions happen without medical evidence. So really something to think about when you're looking at a term policy, conversion benefits, how you can extend that term policy if you need to. Whole life policies, look at the cash value. Look at if you pay for 5 or 10 years, what's the surrender charge of the policy? If you decide to cancel the policy, how much of your cash value do you get back? Some companies have surrender charges and they eat up some of that in the first 10 years. AAFMAA's whole life policy has a return of premium guarantee, which is just a fantastic benefit in the industry. I mentioned long-term care benefit. That's another great benefit that's inherent in the plan. So, when you shop for policies and you're looking for policies, look at also the benefits that come in addition to the life insurance benefit. Yeah. And you know what? I made that kind of sound complicated, but there's a lot of things to think about, right? But there's so many people that are there to help. And I know we'll talk about that in a little bit.
Yeah. And that's just that it can sound complicated, but you hit on something that also is important, is that we've talked about the income earner, right? And that protecting our future income. And we've talked about thinking about the spouse and thinking about maybe a person who's at home, maybe not bringing income in, but is managing the home, and what that would look like if that person wasn't there. But you said yourself, you have insurance for your children as well. Right. So this is, generational. We have to think, almost as part of a good estate plan in any way, we have to think through every aspect of that. So thinking through, even kids, even having insurance on your children. So it's a great thing to think about that a lot of times I think people don't realize.
Yeah. And the children, the insurance I have on my kids, whole life $50,000 policy I took out when they were like 7 and 8. So the premium is so cheap. It's paid up in 20 years, and they have it for their entire lives. Now they haven't hit 30 yet. So I'm still the owner of that policy, but eventually I will transfer it over to them, and that'll be a gift for them, and they'll have it forever. And I also bought them that level term one policy because they're so young, it's so affordable, and those conversion options, I'll have it forever. Eventually, I'll turn that over to them too. But it was just kind of in helping them set themselves up for life insurance. Very good plans. Yeah,
that's
children, great way to insure children for a very for a very small amount.
Yeah. And just like you said, it's another way, right? We're always trying to find ways to protect our kids. As parents, it's one of your most important jobs. And this is just another avenue of being able to do that. And what a great thing to be able to gift when they're 30, right? And they're going to have to pay for it on their own, but a great thing for them to do. So if somebody is out there and they're thinking, gosh, that earlier question, I'm going to pose it again, actually, to our audience and see what they think now. Do you think you have enough life insurance? Are you able to answer that confidently, yes? Or is there a little bit of a waiver in there? If there is some sort of waiver in there and you're like, I don't know, right? I don't know right now. I thought I did, and maybe I don't. Where could our viewers learn more about their insurance options?
I would offer that they can always call AAFMAA and speak with a membership coordinator. They would be happy to help and talk with anybody and give them the pros and cons. They are not commissioned agents, so they do not have to sell a policy. They're not going to be pushy. They're just going to have a conversation with you. So they're always available to answer your questions. I think our hours are 8:30 to 7 o'clock Monday through Friday. Second, AAFMAA.com is a great resource. Some of the information that I went over in this presentation came straight from AAFMAA.com. As a matter of fact, one of those first quotes that I quoted came from AAFMAA.com. So you can go to the Learning Hub, which includes an insurance needs calculator, a life expectancy calculator, and really some valuable articles that cover a lot of this information that we just touched on during this talk.
Mm-hmm. That's great. Well, we've got really good options. And like Cliff said, we're here to answer those questions. So feel free, to pick up the phone, give us a call, or go to AAFMAA.com. I want to thank you so much, Cliff, for being here today, for joining us, for enlightening us more about life insurance and making it a little bit easier to understand. So thank you so much.
Thanks for the opportunity, Sarah.
Yeah.
Yep.
You're welcome. And thank you all to the audience out here for joining us. Hopefully this was beneficial. We will see you here in a few weeks for our next live discussion. So keep an eye out for that. But in the meantime, of course, we look forward to the next opportunity to serve you. So thank you all and have a wonderful day and a great weekend.
Bye-bye.